Hi everyone and welcome back to today's morning report with me, Richard Ferry, market analyst at Hand Tech Markets. For Friday the 4th of July, my final chart of the day is gold. And gold had a bit of a choppy day yesterday. The strong payrolls report is strong for the dollar, and then when you get dollar strength you see the gold price coming off. Also, when you see risk appetite improving, gold also is something that comes under pressure as well, where um, investors look for more risky assets, gold being a classic safe haven. Um, this has taken the gold price back down to the support of that 1310 mark, which actually held quite nicely and is subsequently bounced as the dollar has slightly unwound some of that move. Now, what you would say is this consolidation phase, which had threatened to push higher, is now turned more neutral again, and we're sort of now back into consolidation mode. The concern that I've got is that perhaps these momentum indicators beginning to deteriorate. RSI reaching a 2-day low, a 2-week low yesterday. When obviously the price hadn't, so that is a little bit of a sign of perhaps a bearish divergence, and also these MACD lines beginning to roll over. Stochastics also in overbought territory, and just having a think about turning lower as well. So just the early signs of possibly deteriorating momentum there on some of these daily technical studies that we look at. But as I said, the resistance, the support around 1310 held quite nicely, but 13.6 is the key level. This is back on the hourly chart. 13.06 is the key support, and that was held by that move to 1310. But on the hourly chart as well, you'd be saying that 1325 is a fairly is probably the initial resistance you'd be looking at as well, and that protects that 1332 resistance of the reaction high from the 1st of July. As I said, we're sort of consolidating now. In terms of momentum indicators on the hourly charts, they had turned a little bit negative, but just with a bounce that we've seen in the early European session, they've begun to improve slightly again. But they're more neutral, you would argue, than really negative now in terms of the hourly chart. So that would be backing up this consolidation phase, and you probably find now that gold will be reacting to the dollar, I would say, how the dollar trades, but also there is the possibility of movement around Ukraine and also Iraq, and how geopolitical tensions play out there. But at the moment, as I said, the gold price has come sort of into a more of a neutral configuration, and it seems to be around this 1320 mark that it is trading. So that could be a level that you can work around. Anyway, I wish you good luck in your trading, and I will speak to you again on Monday. Thank you.